Hey everyone, Greg from My Mortgage here. So when we're doing new applications for people, we get asked all the time, why does the bank care about my credit card limit if I don't have a balance on it? Or why do they care about short-term lending, but that's interest-free? So those are kind of two separate things, so we'll talk about those individually. So the first one is sometimes people like to have large credit card limits, even though they never use them. So some people think it's a bit of a game to see how much credit card limit they can get available to them, but they're really good at using their credit cards, and so they just pay them off every month, and the balance is always zero, and they never get charged any interest. So why would the bank care about that? Well, it's what's called a liability. So essentially, at any moment, you could go out and fully max out that credit card, and then you're liable to repay that back. And so the bank has to work on the fact that if the limit's available, then they need to work on that as being a liability that at any moment you could what they're trying to stop is that, yes, you might be really good at using your credit card, and then the day after you get your loan, if you absolutely maxed out your card, could you afford those repayments that are associated with that? So often what the banks want you to do is to lower your limit down, and then that means that then you don't have as big a liability, and it means that if you did go out the next day and max out your credit card, that you could still afford all the repayments. So that's why banks will often request that we lower credit card limits, or that may be a suggestion that an advisor gives you as well. On the other side, interest-free, which is great, and you know, there are lots of situations out there where it might be 12 months interest-free and you're really good and plan to pay that off within 12 months. That's awesome, but the banks still see that as a liability, and there's actually a limit in that as well. So you'll have a limit for that, whatever that interest-free thing is, and then your balance will be at the top of that limit. So the bank need to take that into account. So often they'll ask you to repay it even though it is interest-free, and that's because we're still attributing some of your income to be repaying that debt. So if that's gone, then we don't need to attribute that payment to it, and then that gives you more income from a servicing point of view. So those are some of the reasons why the banks might be asking to do something, and we know that sometimes it doesn't make logical sense. Same with student loans. Occasionally we'll need to get those paid off if they're quite small, and that's purely because then there's more servicing, more income available to pay for a mortgage than if the income has been used to pay a student loan, even though student loan is interest-free. So if you've got any questions about that, or you want to know why a bank has asked you to do something, it's not because they don't trust you. It's not because of that. It's purely just that there are some, or that they don't understand what interest-free means or anything like that. It's around the liability that's associated with that. So touch base with your advisor. Give me a call. Happy to chat through that with you and work through what the best situation is for you with any of that existing liability stuff that you may have.